have with us Feroze Azeez. He's the Deputy CEO of Anand Rathi Wealth, who's joining us on the show. Feroze, good afternoon and thanks for taking the time out. Well, the market's looking at that sharp cut, and by markets I mean not just the benchmarks, that is the Nifty, but the broader markets too. So the mid-cap and the small-cap indices also coming off by quite an extent. Would you reckon that this is the trigger that participants were waiting for? The West Asia conflict has provided that trigger for, well, a near-term decline?
Good afternoon. I think the near-term decline has had some key variables. Of course, news is generally a trigger, but the extent of fall expands or contracts depending on the leverage in the market. Last Friday, the FII long and short position crossed 80% long in the index futures. So which implies whenever it goes 80% on one side, the markets tend to take a breather on the same direction. So it was long 80, crossed after almost about 4-5 months. That's when Nifty was at 26,200, almost about 1,000 points higher than that. So that one thing which coincided with a little bad news, like you said, the conflict. Coming at that level is why you would see a lot of unwinding of positions. And today being an expiry, of course, a weekly expiry, not a monthly expiry, is adding to the pressure. Fourth, today's selling is largely cash market selling. If you look at the premiums have expanded, the October futures are quoting at about 150, 160 rupees greater than spot, which implies the cash market selling is heavier relative to that of the future selling. That means this is actual selling, not just long positions being unwound. Yes, so it's a reasonably good trigger, almost about 4% lower than the peaks of last Friday.
I suppose, Feroze, it'd be hard to assess whether or not that unwinding of those FII long positions will have completed the course of action today. It potentially could carry on for another couple of sessions. But the question is, at this point in time, are there opportunities, or could there opportunities be in perhaps over the next few days that you are keeping an eye on that could potentially be of a favorable outcome?
Yes, see, I personally think you're absolutely right. It's very difficult to say whether the unwinding of the long positions from 81, it was 79.4 yesterday. Does it reach 70 end of today? Does it reach 74? Each of them will have a different interpretation. So point, yes, taken, can't conclude anything with half a day's data. It's not real-time data anyways. You will have to wait for that data to come at the end of the day. Point one. Point two, since the broader market at an index level, which is NSE small cap 250, NSE mid cap 150, which is what the mutual fund track, and Nifty large cap 100, if you look at the relative underperformance of the mid cap and the small cap index at the index level in the most popular index, which is the NSE 500, three subsets. I'm very happy to note that small cap has fallen 2.15 as we speak, and Nifty has fallen 2.13. If this was a broader underperformance of the small cap index, that would mean that the domestic guys have sold today, which looks very unlikely because the broader market is not underperformed. So that's a positive sign that it is a buying opportunity. Now coming to where is the buying opportunity, there are several stocks, especially the capital market related stocks, be it the wealth managements and the asset managements have fallen reasonably 4-5%, 6%. So if there is any stock which you're wanting to accumulate, not at an index level, but the opportunity, especially in the capital market related businesses. Of course, the exchange BSE is higher because of its consolidation of volumes from NSE, which is an unlisted company which you can't buy on a click of a button. But there are some other businesses in that space which have taken a 5-7% cut, which I think is a good accumulation period.
Feroze, I'm uncertain whether or not you will be able to talk about your competitor Angel One, because that fund has also risen in trade, and Angel One is a discount broker, and we were expecting Angel One to also take a significant hit on account of those changes coming through. Even if you can't talk about Angel One specifically, can you give us a rough idea about what you make of the discount broking as well as the broking industry as a whole, given the kind of SEBI norms that we're seeing now with respect to expectation and revenues?
Yes, see, if you look at brokerages, the business model of discounted brokerages has already taken a hit. That this will not impact the discount brokers because they are not so volume dependent. But I think you would have read a circular of SEBI where exchanges were remunerating the brokers on the basis of volume, which is expected to go away. That's where you see Mr. Kamath also, who runs one of the largest broking firms, have said that there will be a 30-40% impact on revenues because there was on volumes. The exchange was providing brokers a remuneration. So when they used to do a zero brokerage to the client, it was not necessarily zero income. The zero brokerage from client meant that some income from the exchanges. So the bigger blow is already behind us, which is the exchanges remuneration. So point one. Point two, I think, see, what is happening is the volumes in the rest of the expiries was very low. It was very retailish volume. Today, if you wanted to trade in NSE Select, which was Nifty Select and Nifty Midcap Select, which was a Monday expiry, you would hardly find even 2 lakh volume on a specific strike. So it is optically a bigger deterrent than the actual volume, because Bank Nifty and Nifty are the ones with maximum volume was there. Fin Nifty, be it Sensex, be it Midcap Select, the volumes were so low. So those have disappeared from the weekly counters to a month-end counter. So I don't think brokerages can get impacted because there is enough maneuvering capability a broker can have. But exchanges will surely, who are consolidated of the entire volumes, will get impacted. And that's why I think the exchanges have had their say in this regulation. Their number of strikes have not come down. And that's where I am reasonably positive that the number of strikes consolidating would have been a little larger deterrent than this weekly expiries of anyways a lower volume index disappearing.